Good morning, and welcome to today's U.S. Market Daily Outlook. Today, the market faces a cautious sentiment, driven by a blend of robust economic data and persistent inflationary pressures. While the latest ISM services, PMI, showed healthy expansion and GDP growth surprised to the upside, the rising CPI and PPI figures keep the Federal Reserve's future policy path under close scrutiny. Major indices, including the S&P 500, DJIA, and NASDAQ, are likely to react to these mixed signals, potentially entering a phase of consolidation. For Circle Internet Group, or CRCL, the focus remains on its technical levels, with some indicators suggesting it's entering oversold territory, alongside recent significant options activity. Key catalysts today include the digestion of economic releases and any shifts in market participant risk appetite. Investors will be watching the 4,500 level for the S&P 500 as a near-term support, and for CRCL, the 114 area acts as a crucial immediate floor. Turning our attention to today's economic landscape, the data released paints a complex picture. The ISM services PMI rose impressively to 52, indicating continued expansion. However, this positive news is accompanied by higher CPI and PPI figures, signaling persistent inflationary pressures. The labor market showed significant strength with non-farm payrolls jumping to 73,000, though unemployment ticked up to 4.2%. Most notably, GDP growth roared back to 3.3% quarter over quarter, a strong rebound. From the Federal Reserve's perspective, this combination of robust growth and rising inflation, even with stable interest rates, might prompt a more hawkish stance in future discussions. For the market, this mixed bag could lead to increased volatility, as strong growth typically supports equities, but inflation concerns could temper enthusiasm for risk assets. This points towards a cautious bias, balancing growth optimism with inflation anxiety. The S&P 500 index appears to be in a consolidation phase, trading around recent support levels after experiencing a minor pullback. Despite the positive economic data like strong GDP and ISM services PMI, the rising inflation figures are instilling a degree of caution among investors. The chart suggests a decrease in trading volume during this consolidation, indicating a lack of strong conviction from either bulls or bears. Momentum indicators appear neutral, reflecting the mixed economic signals. Investors are closely watching for a potential bounce if the broader economic growth narrative outweighs inflation fears, but sustained movement above the 4,550 resistance level would be needed to confirm a renewed uptrend. The immediate support zone is observed around the 4,480 mark, which, if broken, could lead to further downside. The Dow Jones Industrial Average is largely exhibiting a sideways trend, reflecting the inherent stability of its blue-chip components amidst the current economic backdrop. While the index has managed to register modest gains recently, it appears to be testing a key resistance level. The strong non-farm payrolls and positive GDP growth typically bode well for industrial companies, yet the persistent inflation and slight uptick in unemployment are preventing a decisive breakout. Volume levels remain relatively stable, suggesting a balanced tussle between buyers and sellers. Traders should monitor the 35,000 level as a significant overhead resistance, with immediate support observed near 34,500. The Dow's performance today is a testament to the market's cautious optimism, where fundamental strengths are weighed against macro uncertainties. The Nasdaq Composite, heavily weighted towards technology and growth stocks, shows signs of continued cautious sentiment. While it has attempted to rebound, it faces stiff resistance at previous high levels. The mixed economic data, particularly rising inflation, tends to weigh more heavily on growth stocks, as higher interest rates can impact future earnings valuations. Volume fluctuations suggest a lack of clear direction, with periods of increased selling pressure. The index is grappling with the 15,500 resistance level, and its ability to break above this will be crucial for a sustained recovery. Immediate support lies around 15,000. For growth-oriented names like CRCL, the overall Nasdaq sentiment will play a significant role in their near-term performance, implying a cautious stance despite any individual stock's technical signals. The VIX, often referred to as the market's fear gauge, is currently reflecting relatively low volatility, indicating a largely complacent market environment below the 15 mark. This suggests investors are not pricing in significant near-term downside risks. However, given the mixed economic data, strong GDP and services expansion coupled with rising inflation, this complacency might be tested. While today's stable Fed interest rates contribute to this calm, future inflation concerns could quickly change the narrative, potentially increasing implied volatility and hedging demand. Investors should remain vigilant, as a sudden spike in VIX above 18 could signal a shift towards a more risk-off sentiment. The current VIX level implies a stable to moderately upward trajectory, but with underlying uncertainty.
Now, let's turn our attention to Circle Internet Group, CRCL. The stock closed today at 117.59, marking a slight gain of 1.41%. Technically, CRCL has been in a sustained downtrend, currently trading below its middle Bollinger Band, which acts as resistance at 127.06. However, there are some emerging signs of a potential short-term bounce. The Relative Strength Index, or RSI, is deeply in oversold territory at 33.04, typically signaling that the stock might be due for a rebound. Furthermore, both the MACD and stochastics indicators show signs of a bullish crossover, with the stochastics %K line crossing above %D in the oversold region. Immediate support is seen at the lower Bollinger Band around 114.04. Volume has contracted recently, which can sometimes precede a reversal. While the overall trend remains bearish, the technical setup suggests a cautious short-term bullish bias for a bounce towards the middle Bollinger Band. Invalidation of this outlook would occur if the stock breaks decisively below 114. Finally, for CRCL, recent news highlights significant options activity by what are often referred to as market whales. This report indicates large transactions in CRCL options, suggesting institutional or sophisticated investors are making substantial bets on the stock's future price movement. Such activity often reflects a divergence of opinions, with some possibly taking bullish stances through calls or puts, and others expressing bearish views. While the news doesn't explicitly state the direction of these bets, the sheer volume can increase implied volatility and attract more speculative trading. From a fundamental perspective, this signals strong market interest in CRCL's valuation and future prospects within the crypto ecosystem. Upcoming catalysts could include company-specific news, broader developments in the digital asset space, or general market sentiment shifts. In the near term, this options activity could contribute to increased price fluctuations for CRCL, making it a stock to watch closely for any significant price action resulting from these large bets. Thank you so much for joining me today. I look forward to sharing more market insights with you in our next analysis.